What's going on, ladies and gentlemen? Thank you guys once again for tuning into a video. Let's just cut straight to the point because we don't really need to waste time. So thank you for joining in. Today we're going to be talking about gold and silver. Probably going on a bull run. I know, gold and silver seems so boring. It's the old thing to do. Buy gold, buy silver. Why would you do it? It's so boring, etc. Blah, blah, blah. True. Gold and silver does tend to be pretty boring because it's not the most volatile market, but it's probably going to be going up very soon. It already has been. Gold and silver has been something I've been following for the past couple years, well, more or less 2 years, okay? But many people just invest and are just completely head over heels about gold and silver no matter what, always and forever. For me, it's all about timing, and I think now is the right time to really start focusing attention towards gold and towards silver, as we're going to be soon heading into our next economic recession. As many of you guys know, I've been pretty much a bearish trader or bearish overall sentiment on the market for the past year and a half, 2 years. And I'm pretty positive we're getting very close to that economic brink where we're about to start heading in the downwards direction. And when that happens, you can be sure that the prices of gold and silver will most likely increase. So for the past year, I've been buying into gold and buying into silver, just recently added more to my gold position. Now, and this is in no way, shape, or form to pump gold or silver for my current positions, but in all honesty, yeah, I mean, gold and silver are most likely getting ready to start moving. So let's take a look at the chart. Right now, we are looking at, I believe, let's see, a 20-year chart. This is a 20-year chart on gold, okay? These are the gold futures, okay? So we can see back to 53, all the way up to a high of, 1,923. This was basically after '08. So '08 kicked in, gold started going nuts, ripped, and then since then, gold's really kind of been bearish and or pretty much stagnant, okay? So we went through this nice sell-off in gold, and we kind of been bouncing, creating higher lows, and now we are starting to trend up into a fashion of a breakout. And it's very ironic that all of a sudden, not all of a sudden, but it's very ironic that within the past year and 2 years going in, that gold is starting to get more bullish as we have been getting more scared of our next economic recession. So it's hard to believe that it's a coincidence that gold is starting to trend in a breaking out fashion just as we are very scared and very nervous that our next economic recession is right around the corner. Coincidence? Most likely not. And another thing to pay attention to is volume. If you look at the volume, gold always trades pretty decent volume in the millions, right? But if you look, more volume has stepped into gold over the past couple years than ever before, okay? Granted, there might be more people trading these days. Granted, it is easier to get access to different trading brokers and get yourself involved in the market than it was back 10 years ago. So yes, volume does play a role, or there is a role that's being played in regards to volume, which is that it is easier for one to get involved in trading. So to see more volume within the market these days, it's not surprising. But again, volume doesn't lie, okay? People are buying gold right now. As you can see, there's more volume in gold here at these prices than there was here and then there was here. But it's funny to note that over the past couple years, where things within the market are getting more shaky and we're definitely looking at an economic recession, that more volume is starting to step into gold. Coincidence? Maybe, probably not. So if you look at this chart, gold is trending in a great fashion where we can expect to see a breakout soon. We've bounced, we've come down, we've created higher lows. We've bounced, we're hit resistance, we've created higher lows. We've bounced. Right here, we have a cup and handle pattern. That's why we've seen this nice pickup here. All it takes right now is just a couple more rallies back, down, and forth, and then we could very easily see gold breaking out of the $1,300, $1,400 price, okay? And the reason that gold is cherished or used or bought during economic recessions is gold tends to be fairly stable, and it's seen as a safe haven against bad times because gold truly does tend to hold value very well. So again, a lot of people will flee towards commodities or, well, precious metals during bad economic times. And don't be shocked if you see a bad economic time right around the corner. This is something we've been mentioning for a while, but most don't want to believe it. And it makes sense that most people don't want to believe it because most people have a hard time believing the bad truth over the euphoric good time. Right now, markets have been very high. People's 401ks look really good. The retirement plans look really good because most stocks were up. When most stocks are up, your portfolios look bigger, and it appears you have more money than you actually do because any of the gains that are made within the stock market or from any stock-related investment isn't actually true money until you have sold your shares within the company. So everybody's portfolios for the past couple of years, especially from when Trump got elected, and then we went through the Trump squeezed market, right? Portfolios were looking amazing, and people appeared to have far more money than they actually had. Because again, they don't actually have that money. If it says you're up $100,000 in your retirement account, you don't have $100,000. You have $0 until you actually sell those shares. So for the past couple of years, we've had this euphoric high in the market where people have been on their high horse thinking they have more money than they actually have because times are very good. And when times are very good and people think they have more than they actually have, then people spend more than they actually have, which helps boost economic growth. So when you have good times, people's retirements look very good. When people's retirements look very good, they spend more than they actually have because they think they have more than they actually have, which drives great economic growth. When economic growth is growing at a rapid rate, it appears the market's doing very well, and there will be more bullish optimism within the overall market than bearish or negative optimism. But all it takes is a snap of a finger to turn that sentiment very quickly. And that is what we're starting to see. Economic data is starting to show that we are slowing down here and around the globe. Not a surprise. We've been on a 10-year bull run, so this isn't to scare anybody too bad, but to inform you that there's a strong chance that gold and silver is probably going to be taking off here in the near-term future. So from an analytical, technical analysis standpoint, gold's looking bullish. From a fundamental standpoint, it makes sense that gold's starting to look bullish. So the fundamentals are lining up with technicals right now as well. So for me personally, I'm invested in GLD, and you'll see GLD is an ETF. This is a really good one. This is a spider ETF of gold. So this is the one that I've been long for the past couple of years, and I just added another $3,000 long gold, I think last week. Yeah. I had $3,000 sitting around in one of my SEP accounts, so I ended up putting that into gold rather than having it sit around and do nothing. So I ended up buying, I think, another 25 shares of gold. So, share-wise, not a ton. Money-wise, $3,000, pretty good chunk of money to put in because it was just sitting in the account and doing nothing. So I'm like, why would I just have it sitting there? So anyways, spending some more money here. So if we look at it from this standpoint on GLD, right, back from, over here, we can draw trend lines. We can play around with trend lines. Right, and if we bring this trend down, you can see it's right. It was trending in this fashion. Once this trend broke, we got a spike here. Okay, trend line across this top. Once that trend broke, what do we get? We got a spike here. Okay, so you can see every time we change trend or break trend, we're gonna get a big push. Okay, just as we did here. Okay, just as we did there, and where are we coming into now? Just as we are here. But this one's a little different. Rather than getting a big spike over this trend break, we got a push and we had a retest. So what you've seen previously on all of these trend changes is that the trend, right, would break and we go through a big squeeze. Right? Trend would break and we went through a pretty decent squeeze. Okay? This time, trend broke. We didn't go through a big squeeze. We actually came back down to retest. Let me zoom in. We've actually come back down to retest this trend line to tell us, hey, this is now support. So now this old resistance trend has now become a new bullish support trend. So we're starting to trend in a different fashion. if we take a look at silver, silver hasn't picked up on a bullish move yet, and that's because gold is, people like gold more than they like silver. So silver isn't necessarily as great as a safe haven as gold is during bad times, but silver does see some bullish movement through bad times. And right now, silver is just dirt cheap down here at like 13, 14 bucks. So I bought silver back here when it was this low, and I've been holding it ever since. And again, I think we're going to see some similar action in silver where it's going to start picking up and start having some bullish moves along with gold. All right. And I will come back and I will do another video regarding the market, touching on more details about why I believe we're going to be going into another economic recession. I've done videos before on this. My view has not changed for the past couple years. There are some interesting things I think you guys will like. So I hope you guys like this video. I hope that helps you determine maybe shifting some things around, maybe thinking about gold and silver, maybe thinking about playing some defensive stocks here in the near-term future as the market's starting to get a bit more shaky. If I might speak here for a second, I started buying into gold and silver and getting a little bit more defensive now about a year to a year and a half ago, and just started adding more to some gold and silver over this past couple months. So I've already transitioned over a year ago into this, and this is something I've been telling some people to do as well, or to consider it at least. Always remember, it's all educational and fun videos here. Nothing you should take as investment advice, and always speak to a professional before doing so. But hey, I think that's a wise thing to start doing. So I hope you guys liked the video. I hope you learned something new today. If you guys would like, you can join into any of our premium day trading courses or chat rooms or environment or community by taking a look in the description below. We day trade every single day. We do some swing trading. We do some options trading. By involving yourself in our group, you get to stay up to date on what's going on throughout the market on a day-to-day basis and speak with me on a closer basis. That way you can kind of keep up to date on what it is that's going on within the market every single day. Hope you guys liked the video. Like, share, and subscribe as always, and I'll see you guys on the next video. Take care.